Welcome to the WakeCon show, where we discuss housing economics and the economic forces shaping our communities. We're powered by Professor Lending, which is based in Wake Forest, North Carolina. Hence, Wake and Econ together makes WakeCon. I am your professor today, your mortgage professor. I'm your licensed loan originator, and I'm president of Professor Lending as well, Jordan Steffaniak. Hey, nice to meet you, see you. And in this episode, this is episode 5 of 5, module 5 of 5 of the Masterclass for first-time home buyers. But it's not just for first-time buyers, it's for any buyer. So if you watch any of them, you've heard me say this, that people don't buy houses all the time. They're not taught all these things. So it's important to understand all the tools and strategies that are available to you, to leverage them to make the best decisions and to make sure to build you generational wealth for your future, give you stability and success. Now, if you're watching this, you probably haven't watched all 5 in a row, like I've been talking all 5 of these in a row. If you'll notice, I got all the same clothes in all these episodes. I've been recording them all back to back to back to back, and my voice is, rough. But you're going to learn with me as I'm learning to continue to talk despite being tired. By the end of this video, you're going to know 3 things, at least: what to look for and expect in your real estate agent, how inspections and appraisals actually work, and the full mortgage timeline step by step. So key here, the lender who just processes your loan and the lender who protects it are not the same lender. Here's how to tell the difference. Boom, let's get started. Finding the right agent. Okay, choosing a real estate agent is super important. Do not go on Zillow, find the house you like, and just click on the person on Zillow. Don't do that. The person on Zillow is the person who's paying a bunch of money to buy leads. Go ask someone in your community who is the best real estate agent. Ask 3 people. And of those 3 people, if the same person pops up every time, use that person, obviously. Otherwise, you can interview them, right? You can call them up and say, like, look, I'd love to understand what you do because this is a really important decision for me. I want to get it right. I want to get somebody who understands my needs and my goals, actually has my vision. My first real estate agent, I didn't know what I was doing. It was just the person that was listed on the Zillow that I did. It was a terrible experience. Would never go back to him. He didn't understand anything of what we wanted, just trying to make a buck. There's a lot of agents out there trying to make a buck. Don't go with them. You want to go with someone who's a great agent, who actually understands the market, who understands you. So let's talk about what to look for and what to expect from. What to look for: market expertise. You want someone who actually knows the trends in your neighborhood, who knows the roadways, who knows the new developments, who knows all the stuff, who knows the economic development of your community, who knows the large investors that are coming in to build XYZ, to build the hospital, to build the Wegmans, to build whatever it is that's going to increase your property value, increase your quality of life, whatever it is. You want somebody who knows that and has strong network relationships in the community. You want somebody who communicates and cares. Good agents are going to understand what you care about. They're going to prioritize it, and they're going to deliver it. They should always be available to you. Obviously, don't expect them to be available 24/7. They probably are if they're a good agent. Just try not to do it. They're working 24/7 for you, probably, though. Finally, you want someone who can negotiate and strategize. Good agent knows how to structure deals, contracts, offers that are going to benefit you and put you in the best position to be successful. And they're going to be able to tell you the truth. A lot of homeowners, a lot of first-time buyers, they don't know the truth. They don't want to hear the truth. They're going to tell you the truth. There are certain agents that I recommend to everybody. There are certain agents that I would never recommend to people. The people who do know these things. They communicate, they're experts, and they know how to negotiate and strategize. What to expect? They're going to analyze the market value. They're going to know, if they tell you this is what it's worth, trust them. Now, obviously, you can push back, but just they're the experts. Listen to them. Because you don't want them. Let's say you're trying to sell your house at $300,000, but the market actually says it's worth $280,000. If you put it and you say, no, I'm not going to do it at $280,000, I'm going to put it at $300,000. It could sit on the market for 90 days and not get any offers. And then you're going to be in a really bad situation because it's going to be aged. People are going to wonder what's wrong with it. And you're going to end up getting less than you would have gotten had you just started with a strong offer of $280,000. Maybe you get something over that. Now you want someone who structures strong contingencies, appraisal clauses, whatever else. You want somebody who's protecting you from risk, who sees the deals in the contracts, who sees the lines in the contracts and sees the issues with the house, who knows, oh, that bathroom, this, and this is going to be a problem for you. Or be aware of these things. Oh, look at this mold that's growing here. You want someone who can execute with confidence, someone who knows the paperwork, the offer's clean, they're well positioned. Look for these things in a good agent. But I would always do referrals by word of mouth on these things. Don't look on the internet. Internet can matter, but it can skew. People can pay for reviews and skew things all the time, pay for their name everywhere. Let's talk home inspection and appraisal. So these are two things you're going to do when you buy a house, right? Home inspection, not required, but it is an essential piece, whether you're buying existing or new construction. Get an inspection if you're buying new construction. I promise you. Bought 2 new construction houses myself. Inspection, lifesavers, no matter what. This is going to be someone who's licensed. They're going to look at the roof, the foundation, the electrical, the plumbing, the HVAC, structural integrity. They're going to look at everything. They're going to give you this huge report and tell you all the issues. The goal is to protect you and identify any issues. A good agent will know, number one, a good inspector, and number two, they're going to review that report with you to say, this matters, this doesn't matter. This matters a lot. Let's go renegotiate. We found something. We think we need to get a credit to cover this. Good agent can do that for you. An appraisal is very different. It's required from the lender to prove that your home is worth what that purchase price actually is. If it comes in lower than that, you can have a good lender who can help strategize with you to figure out, what do we do here? But also an agent who can strategize and negotiate with you. What do we do here? Let's say we're buying it for $400. It comes in, the appraisal comes at $390. A lender's not going to let you base a loan on $400 value. They're going to base it on $390 now. So now you got a gap. You're paying $400 for this. You're only going to get a loan based on $390 value though. So now you need to bring more money to closing, or you're going to have mortgage insurance. If you were bringing 20% down, now you're bringing less than 20% down because $390 versus $400. There are ways to get around that to solve for that and do a lender paid single mortgage insurance premium. Say it's $1,000 and there's a $10,000 gap. You could have the seller say, you know what? I'll give you $1,000 to cover that mortgage insurance. You don't bring any more down payment. You have no MI still. That could be a solution. Or maybe the seller says, okay, now I negotiate down to $390. Appraisal's there. It can be your benefit to protect the value of the house. They're just going to look at based on location, based on recent sales. If there's not a lot of recent sales, appraisals can be difficult. Your agent should know these things. They should know, can this house actually appraise for what our offer is? Those are important documents. The mortgage process. There's a lot of steps to the home buying process. The mortgage is probably the most complicated. You find the house finally, but then you've got all the paperwork to do. So you're going to meet the lender ideally before you put an offer on a house because you need that pre-approval, right? It's important part of the process. If you didn't have a pre-approval, I don't know what your agent was thinking. I don't know what the seller was thinking. I don't know what you were thinking. Get a pre-approval. So you're going to meet the lender, talk to them, understand your needs, your goals. You're going to fill out a loan application, takes 10, 15 minutes. And then they're going to give you, fill out an application. If you don't have an address, they're not giving you a loan estimate up front usually because they're not required. They have to have the address to do that. Once they have the address, they're going to generate a loan estimate for you. It's going to itemize all the fees, list them all out there. It's going to give you every detailed thing, and they're committed to that. If they say the rate's this, it's going to be that. If you didn't lock it in, obviously, rate can fluctuate. We can talk about rate locks in another episode. I don't know if I did that in this masterclass. Rate locks. Maybe I should. But once you do that, you're going to be in underwriting. You're going to have an appraisal done. You're going to get a conditional approval from an underwriter saying, you are approved for this loan, but I need these other documents to make it happen. You didn't give me all your pay stubs. You have this other address that shows up on your credit report. I need to make sure you don't own that house, because if you own it, then I need to show how much it costs to own that house and include that in your debt to income ratio. You're going to have all these different conditions. You're going to go get all these documents. You're going to sign all these explanations. You're going to give them to the underwriter. And finally, they're going to give you the clear to close. Say, yes, you are clear to close on this house. We approve you fully. Go sign the documents. You'll get the keys. So you'll go to the closing attorney. You'll sign all the documents, 1,000 papers. Be done. They'll hand you the keys. Amazing. We celebrate. We go move in the house. It's great. It's going to take you some time to get through this part. And sometimes it can be complicated. If you've got a complicated income scenario, if you make foreign income, if you're self-employed, if you're doing these different things, it can be complicated. There can be a lot of documents. Bear with the lender. They're doing their best. They're trying to explain it. They're trying to help you. It can be difficult if they ask you for a document twice. Just don't make a big deal. Just give it to them. Okay. People forget. People don't like it. It's a lot of stuff going on. cut them some slack. But a good lender should be on top of it, right? They should be very clear, communicate things very quickly, efficiently, clearly to you. You should know exactly where you're at in the process, and you should know what to expect, and you should know what's needed from you at that moment in time. If you don't, you're using the wrong lender. You need someone who can communicate professionally, proficiently to you. Okay, that's the mortgage process. Finally, what not to do before closing. This is where deals are going to fall apart. And here's some rules that I send to every single person after they're pre-approved and after they go under contract on a house, especially. Do not change jobs. Okay. I mean, you can change jobs, but I just warn people, stability is very important, and a job change could become a problem, even a better paying one. Let's say you didn't make commission. Now you are going to make commission. You get this huge, you're going to hit commission goals every month. You're going to get way more money, but a lender needs 12 months of history of that commission to use it. So even if it's like all but guaranteed, can't use any commission. That could screw up the qualification. So before you do that, let's just talk and make sure we're on the same page. Don't open new credit or co-sign on stuff. Now, it's not the worst thing, but if you open a new credit card, you go buy a house, or not buy a house, buy a car, that could screw up your debt to income ratio, and you may not be able to pay or get qualified. Don't make large deposits without asking first. Okay, every large deposit or unusual deposit requires a paper trail. You need to understand, like, what are we doing here? Let's understand, if it's a gift, we're going to need documentation on that. I need a gift letter. I need all these different things. We got to know. Don't make large purchases. Okay, cars, furniture, appliances, anything that adds to a monthly payment, raises your DTI, that's a problem, can disqualify you, or it can just take the money you needed for your down payment. Don't do that. Don't change bank accounts. I have to verify all these things. If you switch account mid-process, that creates unexplained gaps, that creates more paperwork, more headaches, more documentation. So these bottom two, I mean, none of these are necessarily deal killers. They're just, let's talk about why you're doing it and when you're doing it to make sure this is the right decision and solution for you in this time. Does that make sense? Hopefully that makes sense. Don't do these things without talking or consulting your lender to make sure that's the right move for you. Finally, how do mortgage rates work? I mean, mortgage rates can be confusing, and I'm not going to answer all these questions in this little mini masterclass, but I'm going to tell you mortgage rates are bond-based. So investors buy mortgage-backed securities because they want stable, long-term returns. And the demand for these securities is going to influence mortgage rates. That's why they go up, down. I don't control it. It's the market that controls it by and large. Rates respond especially to uncertainty and certainty. Typically, when the market has economic uncertainty, rates are actually going to be better because investors are going to want to buy these bonds and push rates down, because now the price for these bonds is better for the holder of the bonds. So like it ends up pushing your mortgage rates down. There's also this thing called the spread. And I know this is getting technical for you guys, but if you're nerdy, go learn about it. That's the gap between the 10-year treasury yield and the 30-year fixed rate. They track this. Fred at the St. Louis Federal Reserve tracks it, and you can see the blue line versus the red line. Mortgage rate is always a little bit higher than the 10-year treasury yield, but you can see it typically tracks that pretty closely. So if you look at the 10-year treasury, if it's going down, the yield, then mortgage rates are probably going down. If it's going up, mortgage rates are probably going up. All right, that's it for this 5-part masterclass. So how long does it take to close? Usually 30 days. I don't know if I said that, but I think the graphic showed it. What's a good credit score? Did we talk about that in module 2 or module 3? I don't remember what it was. If you're over 700, you're in good shape. If you're in the mid 600s, it's not terrible, but we could do better. If you're below 600, we've got some work to do. We can make it work, but we got to strategize together. Can I buy with a loan down payment? We learned about that in module 2 or 3, I think. Module 3, maybe. Down payment, 0%, maybe less than 0% technically, because you're getting a 5% grant or something like that. 3% down is the minimum for conventional, 3.5 FHA, VA, USDA are 0%, but there's grants and second liens and all these different things available to make these things fundamentally 0% down or less. What if the appraisal is lower than the offer? We talked about that just now, right? You're going to be based on that new lower value, and it's going to be You're either going to have mortgage insurance now, or you're going to have to bring some money out of pocket or something like that. So just be aware of those things. You need to have a good agent. So what's next for you? If you've made it through all 5 of these modules, you need to talk to me about your goals, or talk about somebody licensed in your state or a trusted professional in your area that you know and you trust and you believe in. Don't just go online to Bankrate. Don't just go online to LendingTree. Don't do that to yourself. It's a pain. They're going to show you interest rates that are, the way it works, they're going to show you interest rates you're paying 2 points for. You're going to think, wow, that rate's really good. Well, yeah, any lender can give it to you if you pay 2 points. Well, let's say you need to talk to somebody you can trust. A lot of people out there you can't trust. You call the call center at the big lender that you find on the internet, and you're going to find some person who's been doing this for 3 months in a call center in Scottsdale. You don't want to trust them. They're not going to close on time. They're not going to know how to structure the deal. They're not going to know all these different pieces that go into it to make sure it's financially advantageous for you. Talk to somebody you trust, like me. I can talk to you in person. I can talk to you virtually. Then you can complete an initial application. No hard credit pull required, but that allows me to see the full picture to give you the best personalized, customized advice. You need customized advice for your situation. Your situation is not like the person next to you. You shouldn't want me to give you generic, bland advice that doesn't actually apply to you. That's why you need to do applications. I can see everything and help you make the best decision. And then you need to talk to a local real estate agent about your goals. Talk to a lender first so you know how much you can actually afford. Then talk to your agent and say, I can afford this. Here's my budget. You can reverse engineer it. Here's my monthly payment amount that I can handle. Here's what amount I'm approved up to. Here's where I really want to be at. Then go make that purchase. But you have to talk to somebody you trust. That's why you can talk to me about your goals. I can help you. If I'm not licensed in your state, I'm happy to give you advice and talk to you. I can't help you actually buy the house, but I'm happy to give you generic, specific advice too. It's like, here's how you should think about these things. So no matter where you live, I'm happy to help you. I'm happy to talk to you. Schedule some time with me. Go to my website, professorlending.com. You can find my email there. You can find all this. It shows it here. Phone number, email, whatever. Email me, set up some time. We can have some time to chat. Would love to help you. This has been a 5-part masterclass. I believe it has been profoundly useful information. So if you haven't watched them all, go find them all. I've got them all on here on YouTube somehow. Click them, watch them, learn, become better, save yourself money, build generational wealth, protect your family. It's all worth it. Home buying is amazing. So great. Do it. Learn.